Hello and welcome to the channel. My name is Manny. This is my first video. What we're going to be doing in this series is investing through Wealthsimple, which is an app on your smartphone that you can download for free and get investing with as little as $1. There are no fees, no commissions. It's Canada's first no-fee brokerage, so you can get going investing, buying and selling at no cost to you. Now, what I've done so far is I've opened up a TFSA and I funded it with $300, and I've purchased so far 2 shares of different companies, and every week hereafter I'm going to invest $100, and we are going to grow this portfolio slowly and steadily, and you're going to see every transaction happen in this series, every purchase, every sale, and hopefully not too many mistakes, but if there are some, you're going to see them all, and at the end maybe I will learn something and hopefully you'll learn something as well. So let's get going. So let's look at the TFSA, and I'll give you a brief summary of what's happened so far. We started this last week. The video was corrupted and it was not uploaded, so I'll give you a brief summary. We purchased 1 share of Brookfield Renewables last week with that $100. It was $50.80 a share, so we were left with $49.20. I did not buy any more because I wanted to keep that extra money in the kitty, because this week's stock was trading for over $100 and I never want to go over that $100 a week. So the way we're going to buy the more expensive stocks is using the change each week. It's going to go into a pot, and I'm going to borrow from that, which I did this week, to buy this week's company, which is Canadian National Railway. These are 2 good stocks to start out a portfolio, and I'm going to tell you why. So the first company we purchased was Brookfield Renewables. That was $50.80 a share. It's a renewable energy company that operates in North and South America, Europe, and Asia. They have hydroelectricity, wind, solar, storage facilities with a total capacity of about 19,400 megawatts, which sounds pretty good. I don't really know what that is. I know what it is. A little about the company. They have solid financials, good and growing cash flow. The dividend is stable. That's another thing that you want to look for. There are some risks in the renewable space, but by risks I'm talking about political and regulatory risks. Brookfield has a lot of long-term contracts, which helps to mitigate that risk, so I wouldn't worry too much there. Overall, it's a well-managed company, and the potential market for renewables is gigantic, and Brookfield is well positioned to take advantage of that market. So that's our first company, and it's one of my favorites, so it's the one I wanted to start out with. My actual favorite stock of all time we purchased this week. It's usually the first stock. It is the first stock I've ever bought, in every portfolio I've started after then. It's always been my first stock, but it does trade for more than $100, so I couldn't buy it last week. So this is our first opportunity, and I jumped on it because it's a great time to get into this company. The company is CN Rail, Canadian National Railway. I'm sure you've heard of it. They operate a rail system throughout North America. I'll tell you a little bit about the company. It's a good, when I say it's a good financial or foundational stock, along with Brookfield, these are good stocks to start out your portfolio with, particularly Canadian National, because it is a good, solid, steady growth stock. There's not a lot of volatility, and it's good to anchor your portfolio with stocks like that before you get into the more high risk investments. When you look at the chart for company like Canadian National and you're looking at the 1 or 3 month chart, you're going to see some fluctuations, but the short-term fluctuations don't really concern us because we are long-term investors. We have a long time horizon, so we don't have to worry about the day-to-day fluctuations. What we're going to do is we're going to zoom out on this company, and now you can see why this railways make a lot more sense when you zoom out, because these charts, they have that beautiful trajectory that you like to see. They start at the bottom left and they head towards that top right. It's a kind of a relentless upward motion that these stocks have, and that's what you want to see, because we're investing for the long term. We're not trying to make a quick buck here, so the short term doesn't really matter in so much that we only use those dips to buy more. So, and now is a good example of that. You can see, going back to the short-term chart, there is a big dip in this chart. It's mainly because CN is potentially in a bidding war with Canadian Pacific over an American railway, Kansas City Southern. It's a big acquisition, but investors generally don't like to have companies that are in bidding wars. Not on this side of the bidding war anyway. For Kansas City Southern shareholders, I'm sure they're over the moon, but a lot of stockholders will jump ship when there's any sign of a bidding war. So 2 weeks ago, this stock was trading at $150. Now it's trading at $132. Same company, Canadian National, just a little cheaper. So we're going to jump on that one. $132. It's a very good time to buy. We might actually buy more if it stays down for too long. So the general theme of this portfolio, I want to get into a little something. In general, I like to invest in not only good companies financially, but companies with good values, employee culture, companies that are doing good things for the environment and our world in general. I'm not too preachy about it. I'm not calling for a boycott on oil and gas or anything like that. I mean, I have a truck in the driveway, it takes oil and gas. I'm not trying to be a hypocrite here. But when it comes to investing, I do tend to put my money into stocks that I feel are good for the future. And Canadian National Railway, you might not think of it as a green stock, but when you do some digging into the company and the industry in general, I mean, the goods have to get to where they're going to keep our economy rolling, to keep our lives the way they are. And rail is the greener option. Sometimes you have to go with the lesser of two evils. Rail is 4 times more efficient than trucks. And CN in particular, they're trying to do their part by reducing their carbon footprint with a number of green initiatives. I'll go into some of them. Some of them include CN Stronger Communities Fund, which supports organizations who are actively protecting the natural environment by reducing waste and pollution and conserving natural resources. This is all from the Canadian National website. They also support Eco Connections from the Ground Up program in association with Tree Canada, which seeks applications for tree planting and greening programs in communities all across its network, with a particular emphasis on properties adjacent to its rail lines. So they are doing their part. I mean, it is a railway. There's not much they can do about that. They still have to transport the goods, but they are doing it in a more efficient way than other methods. So that's where we're at with that. Okay, so let's go into our TFSA account and see where we're at. As you can see, we have 2 companies here, 1 share of each, Brookfield Renewables and Canadian National. Our total balance is $116.88 to spend. Now, by the time the next video comes out, that should jump by $10. Reason being is that this account was referred, and there was a $10 referral fee for using that referral, and the person that referred me gets $25. So that will kick in this week because we have spent over $100. That is one of the criteria for getting the referral fee. How that works is you will get an email referral from someone who is involved in Wealthsimple, who has an account. And when you use that referral and fund your account with $100 and spend up to $100, over $100, in stocks, you will get that $10. And that is not $10 to be used for anything particular on the website. That is actual money. You can withdraw it. It's yours to keep. It's free money. So why not invest in $100 in your account, and you will get that $10. If you don't have anybody to refer you, I can refer you myself. Just send me a quick email to mannymoneycanada@gmail.com, and I will send you a referral within 24 hours. But if you know somebody that's on Wealthsimple, they can refer you. You can always find codes online. I just want you to get started. It doesn't matter if I refer you or somebody else. Just take advantage of that fee. So we have $116.88. That will be $126 next week. We are only going to spend $100 next week because we only go over $100 when the shares trade for more than that, and we have to steal from the kitty. So the remaining $26 will remain there, and then if it gets too high, maybe we'll go on a spending spree. But for now, we'll use that. There are a couple more companies I'm interested in investing in that trade for more than $100. So that's what that money is for. Okay, now I'm going to open up on the other side of the screen my Questrade account. I do have several portfolios. One of them is with Questrade. That is a rival to Wealthsimple. And I use that account for my son's portfolio. He's 5, and I've started an investment portfolio for him, and it is mainly ETFs. That's why I'm using Questrade, because Questrade, it is free to buy ETFs. So here's the portfolio on the left. I have 4 different ETFs. Pay no mind to the allocation. They're all over the place right now. I'm going to go through them all. These are exchange traded funds. They're basically mutual funds that you can buy and sell like individual stocks. I'll do a quick rundown of that. The first one is XAW. This is a total world stock. They cover companies from all around the world, excluding Canada. So every company outside of Canada, every major company is covered here. There are thousands of companies all in one bundle that you can buy with one fund. So that the goal for that for me is 42% of my portfolio. It's a little less than that now just because the allocations have been jumping all over the place for various reasons. I will get back to my preferred allocations in time. So 42% of that is my goal. 18% is my goal for VCN. That is an all Canada ETF. So those are all the major companies from Canada. So with those two ETFs, I have the whole world covered. I wanted to double down on the American stock market because that is the strongest market. So that's why I went with XUU. My goal for that is 30% of my portfolio. That covers the S&P 500. That's an index fund. And then that total is 90%, so there's 10% left. Usually you would want to put bonds in there, but I have plenty of bonds in my main portfolio through the bank, so I don't want to have any bonds in my portfolios here on this series. So I put 10% into a dividend ETF, which pays dividend, monthly dividend, and that kind of stabilizes the whole portfolio. But again, he is 5, so it is a little more high risk, but he can weather the dips and a couple crashes. He's not going to be dipping into this fund for many years, decades down the road. So it's super high risk. It's 100% equity, and for young people, there's not much of a problem with that. It's probably the preferred way to go. So I'm going to be comparing the portfolio we've started with this portfolio, because that's a very strong portfolio, and that's really the way you want to go if you're new to investing. ETFs, maybe find a low-cost index fund, put your money there, and you have no worries. You don't have to check in day to day. You don't have to do a lot of research. You know that these are professionally managed and that you will get that steady growth over time. You're not going to beat the market. You're not going to get rich overnight, but your money will grow steadily and slowly, and that's what you want. So. And keep in mind, I'm not a financial advisor. I'm not an expert. I'm just a guy on the internet. So please don't copy anything that I do here, because you don't know this sheet I have. In fact, this could be a recipe for something. You don't know who I am, and that goes for every video that you watch online. Watch them for entertainment purposes or to get ideas for companies, and feel free, the companies that I'm investing in, do your research on those, and if you feel that they are right for you, then invest your money in those companies, but not without doing your research. I do all my own research, but I do watch a lot of YouTube videos to get ideas for companies and to find companies, because there are a lot of them out there, and I like to see what people are saying about the companies before I do the research. It's not that hard to do research. There's a lot of online resources to help you through that, and I will tell you that once you learn how to do it, it takes a lot of stress out of it, a lot of hassle. You don't have to worry about your stocks. You don't have to go online to see what people are saying. Is this a good time to buy or should I sell? You can log in, look at the numbers, and it's right there. It's beautiful. You have a nice relationship with the numbers, and you don't need anybody else. Trust me, it gives you an inherent advantage over every other investor when you know how to do your own research, and you can look at the financials and you can determine what is going on with the company yourself without having input from anybody else. Okay, so I hope you like what you saw. If you do, please subscribe. It's not going to be annoying. It's going to be one video a week, and you're going to see this portfolio progress over time and hopefully grow, and you're going to see what just $100 a week can grow into, and that's the goal here. I'm going to learn. I'm new to the do-it-yourself investing. Hopefully you're going to learn a little bit as well, and we'll all make money in the end. Thanks for watching. Hope to see you next week. Thank you.